fundsupermart.com.
Hello everyone. Emerging market bonds delivered impressive performance in the first half of 2014. Joining us today is Mr. Diment, Head of Emerging Market and Sovereign Debt of Aberdeen Asset Management, who shared with us his outlook on this segment. Hi Brett, thanks for joining us. Emerging market bond was the best performing fixed income segment in the first half of the year. With the third quarter ending soon, has the investment case changed much for emerging markets as a whole?
I think overall we remain fairly constructive on the outlook for emerging markets. Inflation is falling globally, so that should be good for bond markets. We have a situation where we have very low interest rates in Europe in particular. So in Germany, for example, we have negative short-term interest rates. And so we think investor interest in emerging market bonds will remain relatively high.
What is your general outlook on emerging market debts in the next 6 months? And do you favor any sectors in this space?
Yeah, we think in general investors need to always be selective when they're investing in emerging market bonds. In terms of the sectors that we prefer, we think Brazil in particular is set to do relatively well. In particular, domestic bonds in Brazil, we have yields of about 11.5%. Inflation in Brazil is just over 6%, so you have very high real interest rates and the prospect for some potential positive political change after the presidential elections, which happen in October. Also, some opportunities in some of the Asian currencies. So, for example, we're fairly constructive on the outlook for both the Indian rupee and the Indonesian rupiah.
While emerging market corporate bonds sport a higher spread than their U.S. counterparts, what are the major risks that investors should be aware of?
Yeah, when investing in emerging market corporate bonds, investors really need to do their due diligence. They need to look at the bond contracts, they need to be aware of local legal issues, and also they need to be aware of who the owners are. Do they have any reputational or corporate governance issues? So due diligence is very important. Again, if you do look at emerging market corporate bonds, you'll find on average, not only do they have a wider spread than similarly rated US corporate bonds, but generally they have lower leverage on the balance sheet. So provided that investors have done their due diligence, there can be some very interesting investment opportunities in that space.
Global economies have seen divergent economic growth rates in a year, leading to a disparity in preferences over monetary policies across the world. What is the implication for investors seeking emerging market fixed income exposure?
Yeah, in general, growth has disappointed in the Eurozone economies, which is why we have such low interest rates there. That's weighed on the performance of some of the Central European economies, such as Hungary and Poland. In general, we're fairly cautious of those countries, and we have pretty low weightings across our portfolios. In contrast, we've seen stronger growth in the United States. We think that's going to be positive for Mexico in particular. That's the second largest position on our fund, and we think as the US industrial production growth increases, that'll be positive for Mexico. So again, it's about picking the right countries and the right bonds to get the good opportunities.